AAK delivered a resilient performance in the first quarter of 2025, despite facing softer end markets. While volumes declined by 5%, excluding the Hillside divestment, operating profit per kilo increased by 7%, supported by global optimization efforts and favorable conditions in the chocolate and confectionery fat segment, as well as a strong product mix. Operating profit rose by 1%, building on the strong 32% increase in the previous year's first quarter. However, operating cash flow was negative at 492 million Swedish kroner, primarily due to higher raw material prices and restructuring of sourcing agreements. Net debt to EBITDA stood at 0.43, with a solid 22% return on capital employed. In the food ingredients business, volumes excluding Hillside were down 7%, mainly due to lower sales in bakery and non-specialty oils. Despite this, operating profit per kilo increased by 15% to 2.59 Swedish kroner, supported by a favorable product mix. In the chocolate and confectionery fats segment, volumes declined by 4%, but operating profit per kilo rose to 4.09 Swedish kroner, up 8% year-over-year or 12% at constant currency. Total operating profit increased by 13%. The technical products and feed segment saw a 1% volume decline, mainly in the feed segment. Operating profit per kilo remained stable at 0.67 Swedish kroner, while absolute operating profit decreased by 2% to 52 million Swedish kroner. AAK announced a cost optimization program, subject to union negotiations, aimed at generating an annual cost reduction of 300 million Swedish kroner through organizational simplification, efficiency improvements, and targeted initiatives. The program includes a workforce reduction of up to 5% and is expected to achieve the full run rate impact by mid-2026, with a one-time restructuring cost of 250 million Swedish kroner, recognized in the second quarter of 2025. While sentiment remains soft and global trade uncertainty persists, AAK remains confident in its long-term potential and committed to delivering on its 2030 aspiration. The company continues to optimize its product mix, drive operational efficiency, and unlock productivity improvements across the organization.